What's going on, everyone? Today is November 15th. It is your midweek review. It is Wednesday. I hope everyone has had a good week in the markets and outside of the markets. Henry is back with us. I don't really have any announcements. Henry, do you have any announcements?
All good on my end. Excited to be back.
Alrighty, well then let's go ahead and get into it. If you were on the call Sunday, or if you saw the recording on Sunday, you would have known that I was looking for downside on the dollar, higher pricing on ES. Going to save ES for Henry now that he's back here. But with regards to dollar, I'll update you guys on where we were. Obviously, I was targeting sell side at this low with this BISI right here, and we were wanting that to fill. We were using this BISI as inversion after we closed through it, and then I was using this weekly range equilibrium right here. And obviously, the idea was to pull into the sell side, into this BISI, and then obviously lower end would be 103,500, which would be the equilibrium of basically the low from January or July up until the high created in October. So this whole kind of yearly range, we've established the equilibrium, having price pull back in after this long spool of price higher. Going on a daily, a couple things to note. Obviously, we were looking at this breaker. We were noting the candle closure going into that, right? We did not close above that. We also had the equilibrium right here, which was of this candle's wick, right? So we were using this candle's wick as equilibrium, and we were also using this whole weekly range as equilibrium. Going into a daily, you can see how we respected both of those and the breaker, the bottom half of the breaker. And then on that CPI release on Tuesday, you can see we got that large range day into the sell side. Now we're into this BISI. A couple things to note going into the back half of the week that I will be watching. We just created a SIBI today. So we've got this large SIBI. A main thing that I like to use in a rule of thumb for this, something like this, is really when this SIBI is this big and the fair value gaps are big, really have your main focus on the bottom portion of it. Obviously, for the SIBIs, top portions for BISIs, but on a big, large range day like this, really just keeping an eye on, obviously, these up close candles right here, right, viewed as like an order block. And I really like that the candle closure is also right at the consequent encroachment of that SIBI. So really, idea is if we have enough volatility this week to push back up into here, right, test that consequent encroachment, see how daily candle closure reacts. If we close above it, we could fill the whole thing. If we don't, we could react off of that using these as order blocks and then go lower, right? Stretching back into this BISI and then obviously the equilibrium. You can see we've kind of got relative equal lows down here. And if price does not want to, and that was the most of the volatility this week, and we don't really have any other crazy volatility this week, I could see price pulling just back up into the range and then consolidating in here. Right. And one main thing that's going to keep me in the narrative of whether or not we fill the whole thing or just keep most of it unfilled is how that daily candle closure reacts. Right. So seeing if price wants to push up into the consequent encroachment in and around 105 flat into these candle bodies as order blocks and seeing, okay, well, how do we respect there? Right. Do we close below it? Do we just wick it? And do we go lower, or does price kind of close above it and do we fill the whole thing, right? You've kind of got an overlap now of some SIBIs. So I would also look into just this whole area right here and note that price balanced it, right? Offered sell side, buy side, now displaced again. So this would be kind of my last resort of wanting price to go higher. I would just want it to kind of fill this SIBI for the most part and go lower. But I really would rather, if we're going to continue going lower and stay heavy-handed, like obviously we showed off of Tuesday's CPI release, we are going to go lower. I would prefer to leave this top half unfilled. Other than that, that's about it for me. Obviously, after this reaction, we've now formed another important part of structure. So I would prefer price to stay actually below this, obviously, preferably, but not permitted to, going and filling all of this, but preferably, and more the satisfactory kind of idea is price just filling the bottom half of this, staying heavy-handed to the downside and continuing down lower. Other than that, that's it for me. Just keep note that we did tap into this BISI here, so that's why you will probably start to see a retracement in here. Notice how it did not fill all of it, though. There is an opening here. It did not quite reach the consequent encroachment. Other than that, that's it for me, and I will see you guys on Sunday's call and in the forum and social platform. All good, Henry.
All right. So I hope everyone's doing well. I was away the past week on a bit of a vacation, but excited to be back in the market this week. We've seen our buy side targets delivered that we talked about a couple weeks ago, and now just continuing to remain inside this buy program, reaching up toward higher targets. So here, starting on a monthly chart, you can see we reached down under the sell side down here, purging it right there. And now we have that kind of purge and revert idea where we run out the sell side and work back up toward buy side. So you just look at the previous monthly candles to find your buy side targets. So here we had October's high, which we ran out just this past week. And then now we're looking for September's high up here. So if I mark that out as the buy side, that'll be the next area we're reaching for. So 45.97.5. Dropping down into the weekly chart. You can see here on the daily chart, we have closure above this weekly city. Not yet on the weekly chart, but we'll see where this week ends up. Since we did get closure on the daily chart, I would now expect this area to act as inversion. So if I drop down quickly to the daily chart, you can see that we're now above that weekly city, getting closure right here. So you can see price trade back into the high of this, or even down into the midpoint, and then continue working up for the buy side. Back on the weekly chart, we're back up inside this last up close candle right here. So really just seeing this as a speed bump, but you want to monitor the mean threshold of that, marking out the body right there. And so if we get closure above this on the weekly chart, then we can expect buy side to trade up here. If this weekly candle does not close above the mean threshold, then it's possible we could consolidate in this range a little bit longer before working up to the buy side up here. Okay, just going to remove that real quick. On the daily chart here, now you can see that pretty clear market maker buy model, just like we had here in the sell model. Now we're looking at it in the reverse. So here we had a low, high, lower low, running out. This is your breaker across right here, accumulation occurring inside the breaker. And then you get one last tap down into it right here. I'll just draw that out. So that's your bullish breaker. One last tap right there, and then moving away quickly, digging up through that weekly city, and then closing above right here. Now we've left this BISI behind. Today we just kind of consolidated up here, which is normal to expect after a large range expansion, because remember, we go from expansion to consolidation, and then we could have a retracement or we could have continued expansion. So it's possible now to see a return into this daily BISI, and then just monitor these levels as well, right? The high of the weekly city and the midpoint down here. That's good control. Okay, watch those, and then watch for price to start working up toward the buy side. Also monitor this high right here from Friday, September 15th as the buy side to reach to before ultimately reaching up here. So that's 45.66. If we do drop down, I really wouldn't want to see price trade back below the low end of the weekly city. And if we do get closure back below here, we can work back into the breaker and back into the opening price of this down close candle. Otherwise, just keep your eyes up here. I'll quickly look at NASDAQ. NASDAQ has been the leader, which we could see pretty clearly on the monthly chart, right? Because here we just came down into this monthly BISI, just falling short, actually, of the consequent encroachment of it, and then working back up above October's high. And now ES has yet to reach above September's high, but NASDAQ has already done so and is reaching up toward these highs that were created in July this past year. On the monthly chart as well, this is the volume imbalance that I had noted 2 weeks ago. Right there, small separation between these two candles. Okay, right there. So if we got the closure above the weekly CIBI, this is a chart. Let me drop that down a sec. So if we got the closure above the weekly CIBI, which we saw right here, the next target was that monthly volume imbalance, which you can see right there, just above the bodies of these candles as well. And then now you can see that we've traded up into the highest body within the swing point, which is the rejection block. And that's where the high of the week has been made so far, right? So it's possible we could now consolidate inside the range, or we can continue working up toward buy side like we're expecting on ES. On the daily chart, same sort of idea here. Still looking for a buy side above these highs, and then ultimately above here. Now that we've traded and closed above the monthly volume imbalance, that's something you can look to as inversion. Look at this too. Now it's likely in a similar position as the consequent encroachment. Here, remember when we have a volume imbalance included, we include that with the VISI, right? So it's not just this high to this low, we also include the volume imbalance as well. So I'm drawing this when I'm finding my consequent encroachment from this high to the volume imbalance. Right? So instead of drawing it to here, I'm drawing it to there. All right, and that gives a consequent encroachment of 15,745 and a quarter. So just above that monthly volume imbalance. So you can see price whip down through there, tap into the volume imbalance, and use that as inversion to trade back up higher. So as we get into the end of the week, just expecting price to likely make a retracement into this range and either consolidate there through the rest of the week or have a continuation back up toward the buy side. If we get a closure back down below the low of this VISI, then we can start working back down into breaker here and the down close candle right here. That is it for me. Any comments?
I'm all good there. Nope. I'm all game there. All's well. Other than that, guys, that's it for us. Keep it short, keep it sweet. That's what a midweek review is all about. We will see you guys on Sunday. If you guys need anything, questions, comments, concerns, please hit us up in the back end of our website, www.firsthandtrading.com. Please make sure to follow us on any socials at FH Trading Group. And we sure do appreciate you guys.
Talk soon. Take care, y'all.